Thank you, Mr. Chairman. Thank you all for being here. And I must say, listening to all this, that under a Trump administration, my business, my family, my friends, and my bank are much better off today with the diluted CFPB. And the CFPB's 1071 Small Business Lending Rule requires financial institutions to report 81 unnecessary data points on the loan. For smaller institutions, this rule creates a mountain of compliance burdens and will harm their relationship with consumers, which many are community banks and credit unions and who they rely on. This also leads to reduction in the amount of small business loans, and the cost of a loan will skyrocket and decrease access to capital. Now, my bill, the 1071 Repeal Protect Small Business Lending Act, will repeal this burdensome rule and give relief to the financial institutions who serve small businesses every single day. So, Ms. Fonseca, how will complying with these burdensome 1071 data requirements impact your ability to provide affordable access to credit for your small business members? And could you expand on the benefits of repealing this burdensome regulation?
Yeah, complying with this burdensome requirement is going to limit our ability to lend to small businesses.
There's no question regulations keep you from loaning, basically.
Absolutely.
Okay. When I talk to friends of mine that are bankers, accountants back home in Texas, one of the biggest concerns with the CFPB's regulatory agenda and the compliance burdens that accompany that agenda under former President Biden and former Director Chopra, the CFPB was left unaccountable and regulated through blog posts, speeches, and other illegitimate means. This left the financial service industry in a constant state of worry, never knowing what regulations or enforcement was coming next and how it would affect them and their customers. We must prevent this approach to regulation and the uncertainty it brings to smaller entities and other institutions and hold the CFPB accountable to Congress. That's a new word to them, by the way. So, Mr. Snyder, can you explain to the compliance difficulties that financial institutions face when dealing with the CFPB that is always expanding and often opaque regulatory regime?
Well, during the past preceding 4 years, it was certainly an exciting time to pick up the trade press in the morning because there was going to be a new blog or a post or something that your clients would be calling you about because it seemed to speak with the force of law, that there is some new requirement that you have to deal with. But there was absolutely no formal process that surrounded that. So not only are you questioning the legitimacy of the rule itself because of the manner in which it was announced, but you have no real way to understand what is required. So you're searching in the dark, you're spending a lot of money seeking advice from counsel, but I guess that's great for lawyers, but I'm not sure it's good for institutions that could be devoting those resources to lowering costs of credit and providing more innovative products.
Mr. Palmer, in your testimony, you mentioned that CFPB had misrepresented data to justify their policy decisions. I agree with you when you said facts matter and regulators must represent facts accurately. So it's deeply troublesome that CFPB misrepresented data to support their highly politicized actions, and industry participants should be able to trust that regulators are not falsifying information to achieve a political victory. This kind of behavior could have detrimental effects on our financial system. So, Mr. Pomeroy, could you elaborate on the most serious examples of the CFPB misrepresenting data and explain the harm caused by these practices?
Sure. I'll take the credit card late fee rule. This is a rule that would exponentially lower the late fee from $32 down to $8. And the Bureau's justification for this was that there was lack of competition in the marketplace and that the 4 largest issuers actually kind of dominated that market, when actually their data shows that those 4 issuers actually lost 4% of the market in the previous year. So it's important for them to be intellectually honest with the data when they're presenting it to the public. Otherwise, we're being led down roads based on intellectual dishonesty, and that will possibly affect the access to credit, especially for subprime borrowers, if we're not actually looking at the data correctly.
Well, thank you. And I just would close by saying, the Trump administration, as I said earlier, is right on the right path with the CFPB. And as a business owner myself for over 50 years, car business in Texas, an economy with a lesser CFPB is much better than one that is under steroids like we've seen in the past. So thank all of you for being here. I yield my time back.
Gentleman yields. The gentleman from